Hello, the Stockhead faithful. Good to be back with you again. This week I'll be talking about a Canadian copper developer up in the northern Nunavut region that's had some interesting geophysical results. First on to markets, a pretty volatile week. A lot of chatter about gold going through 3,700 US an ounce. So generally we've got a pretty supportive market for precious metals. We've got a slowing US labour market, a lot of discussion on tariffs still, record purchases of gold including physical demand and central bank activity, well over 2,000 tonnes of gold this year. The total spend has now reached over 0.5% of GDP, which is a record for gold over the last 50 years. So pretty bullish market there and plenty of activity amongst the gold juniors. We saw copper spike to over US 13,000 a tonne after Trump flagged that it would bring a 50% tariff back onto imported copper into the US. That created a very large arbitrage between the LME copper, which was trading at just under 9,800 US a tonne. So that volatility is no doubt set to continue. The uranium market looks pretty strong. I think that's going to see US 120 a pound over the next 18 months, which according to Morgan Stanley is about your incentive price to bring the average uranium deposit online. Small modular reactors are projected by many to account for over 20% of uranium demand in the medium to longer term. There seems to be plenty of activity from uranium enrichers looking to buy more uranium. The stock of the week, this is one I haven't spoken about for quite some time, American West Metals Limited. The ticker is AW1. Rather a disappointing year last year after a pretty stellar 2022-2023. They were fortunate enough to outline a maiden resource about 18 million tonnes, which has now been upgraded to just under 21 million tonnes at 1.1% copper. I thought their exploration activity or their drilling last year was directed too much around brownfields areas and not enough opening up that 100 kilometres of strike, which is highly prospective and has indications of copper and zinc all up and down it. The company published a scoping study or a preliminary economic assessment, as they call it in Canada. Modest set of numbers, but still positive. NPV of 150 million US over a 6-year mine life. All-in sustaining costs are just under 3 US a pound, with a pretty low capital cost of around US 50 million. I don't think that's the main game. I think the main game here is to see if the resource inventory can go through 50 and maybe 100 million tonnes over time at better than 1%. The company recently put out an announcement on a large-scale geophysical targeting campaign using mobile magnetotellurics. Came up with some very interesting anomalies, pretty big anomaly north of Cyclone at depth, and some pretty strong anomalies to the south, extending over 16 kilometres. A little bit disappointing that there hasn't been more regional exploration. The share price, top 36 cents, has made its way down to about 3.2 cents. They probably will need to do another capital raise soon, so that's a little bit of a caution, but it is getting pretty cheap and there certainly will be a trading opportunity coming up. So a bit of news flow ahead of us for American West. Assays from the recently completed RC and diamond drilling program are due in the next 3 weeks. Mine permitting's ongoing, pre-feasibility studies in full swing. Exploration is winding down in that sort of Resolute region as you move into the winter period. So you might see a bit of weakness in the stock, and I imagine they'll be looking to raise further funds over the next 4 to 6 months ahead of next year's field season. That's all for this week. Looking forward to speaking with you next week.
For more ASX news and analysis, subscribe below.